Hello everyone. Welcome to the Stock Minds web channel. In a world where gold prices and mining operations often produce volatility, New Gold NYSE American NGD has delivered a surprisingly strong third quarter in 2025, showcasing both robust growth and improving fundamentals. With a sharp surge in revenue and production, New Gold appears to be transforming from a struggling mid-tier miner into a more confident and potentially undervalued gold and copper producer. In this video, we will dive into New Gold recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About New Gold. New Gold is a Canadian mining company based in Toronto, originally founded in 1980 as DRC Resources. After merging with Peak Gold and Metallica Resources in 2008, it evolved into a mid-tier producer. The company operates two main assets: the New Afton mine in British Columbia, an underground gold-copper operation, and the Rainy River mine in Ontario, a gold-silver site transitioning underground. Through these mines, New Gold produces gold, silver, and copper using milling, flotation, and leaching processes. New Gold financial performance. New Gold delivered an exceptionally strong financial performance in Q3 2025, highlighted by substantial year-over-year growth. Quarterly revenues surged to $462.5 million, up 83.53% from $252 million in Q3 2024, while quarterly EPS jumped 274.99% to 18 cents from 5 cents. On a trailing 12-month basis, revenue reached $1.24 billion, a 44.19% increase from $861.5 million, and TTM EPS climbed sharply to 31 cents compared to 2 cents last year. Free cash flow per share, TTM, down to 10 cents, a decrease of 23.08% from 13 cents a year ago. Profitability metrics are strong, with a gross profit margin of 63.13%, net profit margin of 20.07%, and free cash flow margin of 6.46%, alongside solid returns, with return on asset of 12.83% and return on equity of 22.29%, supported by a healthy 0.32 debt-to-equity ratio. Over the past 5 years, New Gold has grown its revenue at a 14.9% CAGR, and net income has also risen rapidly since 2024. With gold prices reaching high levels and production increasing, the company's improving financial performance is expected to continue. New Gold Fiscal 2025 Financial Forecast. Looking ahead, analysts project continued momentum, forecasting $1.5 billion in 2025 revenue, a 61.89% increase from $924.5 million in 2024, and expect non-GAAP EPS to rise to 62 cents, up 210% from 20 cents. Wall Street analyst maintains a buy rating, with an average price target of $9 representing 12.08% upside and the highest target of $12, implying up to 49.44% potential upside. NGD stock price performance and valuation. At the time this video was created, New Gold stock was trading at $8.03 per share. New Gold stock has delivered remarkable performance, climbing 195.2% over the past year, outperforming the S&P 500's 12.9% gain. Its long-term performance is equally impressive, rising 297.5% over 5 years compared to the index's 84.2% increase. Despite this surge, New Gold's valuation remains compelling, with a price-to-sales PS ratio (TTM) of 5.28, forward PS of 4.38, non-GAAP price-to-earnings PE of 18.4, and a reasonable forward PE of 13.35, while the price-to-free cash flow PFCF is 79.2. Based on Fiscal.ai data, when we look at the valuation since 2023, the forward PS is above the average, while the forward PE is below the average. The forward PE suggests the market is not overpricing the company's accelerating earnings trajectory. Combined with strong operational momentum and analyst forecasts pointing to continued revenue and EPS expansion, New Gold still appears attractively valued and positioned for further upside. New Gold growth potential. New gold growth prospect remains solid, driven by several factors. 1. Record production ramp-up and operational momentum. New Gold delivered strong operational results in Q3 2025, with consolidated gold production at 115,213 ounces and copper production of 12 million pounds. Rainy River led the way, producing a record 100,301 ounces of gold, a 63% rise from Q2 2025, driven by higher-grade material introduced in June. This demonstrates New Gold's effective execution of its strategic mine plans. Revenue rose 83.5% year-over-year to $462.5 million, fueled by Rainy River's output and higher gold prices averaging $3,458 per ounce, up 37.9%. Looking ahead, gold production is expected to grow 16% in 2025, reaching 325,000 to 365,000 ounces, with a 55% jump in 2026 to around 490,000 ounces. Copper output is forecast to nearly double by 2027, hitting 95 to 115 million pounds. This momentum establishes a strong base for revenue expansion and sustained profitability across assets. 2. Aggressive all-in sustaining cost (AISC) reduction and margin expansion. One of New Gold's strongest growth drivers is its steep cost reduction trajectory, which supports margin expansion and strengthens competitiveness. In Q3 2025, the company delivered an AISC of $966 per gold ounce on a byproduct basis, a sharp $425 per ounce improvement from Q2. Rainy River also posted significantly lower costs at $1,043 per ounce. Looking ahead, management expects an aggressive 3-year decline, projecting AISC to fall roughly 70% from 2024 midpoint levels to just $400 to $500 per ounce by 2027. These reductions are supported by the completion of major capital projects at Rainy River and the higher margin output from New Afton's C-Zone, where copper credits lowered gold AISC to -$687 in Q1 2025. With gold averaging $3,456 in Q3 2025, New Gold gains exceptional leverage for earnings and free cash flow. 3. Strategic mine life extensions and long-term asset visibility. New Gold has strengthened its long-term outlook by extending mine life at both core operations, providing multi-year production visibility and reducing execution risk. At New Afton, mine life now runs to 2031, supported by the high-grade East Extension Zone, which contains copper and gold grades more than double those of the C-Zone. The company also increased C-Zone reserves by 27% through a draw height expansion completed with no added capital, while exploring the promising K-Zone for future upside. At Rainy River, the optimized Phase 5 expansion extends open-pit mining to 2028 and keeps the mill operating to 2029, with underground reserves rising to 1.34 million ounces and resources up 76% from 2023. These gains, achieved through disciplined technical work, enhance visibility, cash flow stability, and long-term value creation. Risks to consider. While New Gold stock looks attractive, we should be mindful of potential risks. 1. Commodity price volatility. New Gold's profitability remains highly sensitive to gold, now above $4,000 per ounce, and copper prices, both of which fluctuate with global economic conditions, shifting investor demand, and geopolitical tensions. Any sustained downturn in these commodities could compress margins and weaken cash flow. This risk is amplified by the company's ambitious production targets, which depend on relatively stable metal prices to support earnings and sustain operational performance. 2. Acquisition completion uncertainty. The core mining acquisition of New Gold requires shareholder, regulatory, Canada and U.S., and court approvals, creating risks of delays, rejection, or termination that could trigger breakup fees. Ongoing litigation or failure to meet closing conditions may block the deal entirely, leaving New Gold vulnerable as a standalone entity. As of December 2025, the process remains pending, weighing heavily on the stock in the near term. 3. Regulatory and expansion hurdles. Stricter environmental and safety regulations continue to raise compliance costs and prolong permitting timelines, creating structural challenges for miners. Expansion projects also face heightened scrutiny, increasing the risks of budget overruns and schedule delays. Together, these factors complicate New Gold's ability to execute growth plans efficiently, especially within a highly competitive mining landscape, where regulatory pressure and cost inflation can materially impact long-term project economics and operational performance. Conclusion: New Gold's strong operational execution, impressive financial growth, and robust profitability signal a company entering a powerful new phase. With rising production, expanding margins, and bullish analyst expectations, New Gold shows the characteristics of a miner gaining both strength and stability. Its solid balance sheet, attractive forward valuation, and consistent stock outperformance further reinforce its long-term appeal. While risks remain, the company's momentum and outlook make New Gold a compelling investment opportunity for growth-focused investors looking for a solid gold mining stock. But remember, this is not a financial advice. What do you think about New Gold? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.